Ladies and gentlemen, hello and good morning, everybody. My name is Darius Anucauskas. I'm the global market analyst here at Markets.com, and today is Wednesday. Today is the last trading day of the month of April, and we do have a very busy calendar, in my opinion. I think everybody decided just to pile everything into the into the one day and just throw it out there and deal with it, right? Look, we're gonna dig into all that. We're gonna look at the data, and hopefully you'll enjoy the session. By the way, this is, as always, this is a quick video preview if you haven't figured it out yet. So the real webinar will start in a few seconds. The live webinar, the live webinar will start in a few seconds. So stick around, do not tune out. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, okay, ladies and gentlemen, hello, and good morning. This is me, Darius Anucauskas from Markets.com, and today is Wednesday. If you're wondering what day of the month it is, well, it is the last trading day of April. So, ladies and gentlemen, today we have a bunch of economic data sets getting released. We'll look into all that in a little bit. But before we jump any further, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. A few moments for you to have a read through this risk disclaimer. Also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look what's happening with the market. Now, first of all, before I jump into economic data, we can see that the Nikkei 225 has been on a nice little recovery mode. And we're kind of getting closer, or at least trying to get closer to this downside line. But we're getting currently getting a hold up near the 50-day EMA, and yes, I mean if this barrier continues to provide resistance, maybe a bit of a retracement back down could be possible. However, I think that the market right now is going through a little bit of positivity, because again, it seems like we're seeing some positivity. We're seeing some easing off in the White House. I mean, and we're seeing how they're planning to lower the tariffs here, remove maybe even tariffs, and that's of course is spilling into some positivity. So at the moment, like I said, I'm still somewhat positive in the near term. I'm aiming for this downside line taken from the high of the 24th of January. So in a way, this downside line is something that I am keeping a close eye on. And I know that there's not much room there's let's say a little bit of room left here to fill this area up until this downside line, but nevertheless, still, I think that's a good area to watch. And look, I mean, I'm not really trying to be very aggressive here, because things can change very quickly, very quickly straight away. So, long story short, for now, I would say this way, that yes, I'm somewhat positive in the near term. I'm aiming for this downside line, which is not far from the 100-day EMA. On my daily chart, excuse me. Oh, excuse me. But I would say that the reversal can happen at any moment, because again, the White House right now is trying to play the good guy here, and saying that oh, China needs to back off a little bit, but you started it in a way, so it's a little bit difficult one, right? So look, for now, like I said, I'm going to continue targeting the upside, looking at the economic calendar. What's some here is that where's that Japanese data? In retail sales came out this morning. We saw the year-on-year number rising to 3.1. Yes, the expectation was for a 3.5, but okay, look, I think that's a decent number. Yes, it didn't beat the forecast, but still is better, much better than the previous figure. Industrial production, now, although this is the preliminary figure, did decline a little bit. Sorry, something got into my eye. Did decline a little bit. It fell into negative territory, but look, not significant. Still okay. I mean, we are not seeing like a percent or something like that, but it's still doable. Now, look, what can I say? For now, I mean, looking at the Japanese data here, in the housing starts, we have a decent improvement here. Construction orders increased, coincident index final. Okay, there's an improvement here as well. So in general, Japanese data is looking quite good here. So that's kind of supporting the stock market here as well. Another thing to keep in mind for this one is, let me just jump into tomorrow. And that's the interest rate decision from the BOJ. Yes, new start, new month, new interest rate decision. Tomorrow, the Bank of Japan is expected to keep the rate unchanged. However, currently, if we look at Japanese inflation, we're seeing some up moves in there, and in a way, that's not really something that the BOJ should be missing out on in terms of, or let's say, not looking at, because I'm sure they're looking at this, and certainly that they're thinking that. Started stumbling here a little bit. They don't want to. They want to go for a rate hike. It's understandable because they need to maintain inflation. However, they cannot. They don't want to do that yet because they need to support the overall economy to stimulate that, and lower interest rates do help that. So. And that's where they need to kind of balance, either to control inflation and protect the Japanese yen by hiking rates, or actually going for those rate cuts or something in order to support the economy. However, to go for rate cuts, I don't think that this is something on the agenda. It's more of a if they're going to keep the rate or not. So at the moment, we're expecting to see the rate unchanged, and that could be seen as a positive for the stock market. And we could see this one, like I said, we could see this one rallying. So that's why I am a little bit more on the positive side right now on this one. And I think that there could be some more upside just basically because of the Japanese yen, the BOJ remaining at the keeping the rate at the current level. So let's see what's going to happen there. For now, I am, like I said, I am somewhat positive here on the index here, but I need that clearance of that 50-day EMA shown here as the green line. Let's jump into China very quickly. China is correcting back down a little bit. That's fine. I mean, I think I see this as a little kind of correction moment, because if we continue to trade above the 200-day EMA, then I would say we could stay positive here. And if we do remain above this 200-day EMA, yes, there is still a good chance for this one to rebound and push back up, because the 200-day EMA has been a good area of support recently. So we're keeping an eye on this one. The decline here that we're seeing could be attributed to the Chinese data which came out today, and that was, for example, the Tianjin manufacturing PMI. It was a little bit on the lower side. Yes, it came out better than the forecast. We managed to remain in expansion territory, but still it's on decline. It's on a decline. Still is below previous figures. So hey, what can I say? For now, it's a tricky one. Tomorrow we're from China. China is off tomorrow. It's May Day, so Labor Day. So yes, I mean the index will be closed. But looking at this picture right now, yes, we're seeing I'm approaching this one from the technical perspective, and like I said, I'm going to keep an eye on the 200-day EMA, and then we'll go from there. Now let's jump into the US. Looking good here. We broke above the this downside line here. I talked about this on Monday, if you remember, if you watched my webinar. I said that look, we're stuck in between these two trend lines here on the Dow Jones Industrial Average. We broke through the downside line, and the next target is the the other downside line taken from the high of the 20th of February of this year, which kind of in a way coincides nicely with the 50-day EMA. So that's what I'm going to do. That's what I'm going to aim for now. Look, I would say at this point, everything seems to be somewhat on the positive side. Like I said, also given the fact that we're seeing some positivity coming out from the White House, that's already like a good sign. Let's see if that's gonna stay like this. Just a second, I wanted to double check some information here very quickly. Right. Okay. So, right. Okay. Just looking at, this is the thing. This is what I'm referring to. Now, you have to be constantly on the watch, like of the news, and I mean, look. Yesterday we know that the White House kind of did soften its stance on automakers, so and soften their tariffs on automakers, and
Interest rates came down despite the
and yeah, I mean, it was a positive sign, right? I mean, the market rallied in that sense. But the thing is that now there's like that there is and now he's I'm looking, I'm sorry, this information is coming through as I'm just watching this, and now he's trying to attack Jerome Powell, saying that that he's not the best person. He's not really, well, quote, I have a Fed person who is not really doing a good job. Right. Okay. There we go. Now we have another attack on Jerome Powell. So I think that the market could, market is already seeing a little bit of a correction. However, let's see how this is going to get managed. If somehow the news starts coming out saying, oh, this is not what he meant and blah blah blah, then the stock market could continue rallying. Not rallying, but correcting back up, because let's not forget that this right now, this move to the upside is a correction back up. So yeah, I would say, like I said, it's at the moment it's a difficult one here. It's a one-man show for sure, and we need to go like through day by day on like to see headlines, what are happening. And at the moment, I think that yes, this one person decides to he does what he wants to do, and the market kind of reacts accordingly. Look, I would say this way, like I said, keep your eyes on it, because at the moment it's quite somewhat positive, but again, up until this 50-day EMA or this downside line, that's what I'm going to aim for. S&P 500. S&P 500 is an interesting one here as well, and we found good resistance near the 50-day EMA. That's fine. We did clear the downside line, and certainly, yes, we could see this one pushing further north if we do climb above the 50-day EMA. That's my simplistic approach on this one. For the downside, I'm not going to do anything until I see a drop somewhere back below the 5,325 10 zone, somewhere around here, basically. I know we're missing out on a lot of territory, but to be honest, I'd rather be safe than sorry. Some of you might say, but hey, what about this little upside line here? Well, you can keep an eye on it, of course. Or is it this way, or is it the other way that I've drawn this one? It's really subjective in a way at this point. So you can keep an eye. If you're comfortable with this upside line, you can keep an eye on it. Of course, it's all the matter of interpretation. But it's just, for me personally, I want to be a little bit more on the safe side. If I get a drop below this territory, I'll go a little bit lower. NASDAQ, let's have a quick look what's happening here with NASDAQ. NASDAQ is climbing up here. Let's have a look at what's happening with NVIDIA. By the way, MSFT earnings, those are coming out today, so keep your eyes on Microsoft. I think that there's more than this company, more than that. Let me just have a look very quickly into the earnings calendar. Actually, you know what? Let's have a look here. Products, screeners, stock. Sorry, not calendars. Oh, calendars, earnings. Actually, you know what? What am I doing? Here, we're here. Um, First of all, we need to filter this by yeah, by country. So let's get rid of the EU here. Apply this. Um, First national market caps. So okay, Tuesday, Wednesday, ladies and gentlemen, let's have a look at market cap. There we go. Trillion. Microsoft, Meta, Samsung. These guys, Qualcomm, Booking, Caterpillar, Airbus. So these guys are reporting Iberdrola as well. If you're watching this, these guys are reporting today. Yesterday we had Visa. Nice surprise here. Coca-Cola did have a good moment. Let me just have a look at KO. What's happening with KO? Good result here. There we go. Initial decline here. Boom. Testing the 50-day EMA. Rebounding. Moving nicely to the upside. So sorry about this. Looking good here. Looking at this. Okay. So what else to keep an eye on? Apple, Amazon, Eli Lilly, MasterCard, McDonald's. So those guys are coming out on Thursday. So let's keep an eye on this, of course. Well, I'll pick up on those companies on Friday when I'll do my webinar. By the way, just to let you know, today I'm holding a webinar session. So you'll find the link in the description of this webinar at 4 o'clock. So the webinar that I'm going to be doing is also going to be a live one. And we'll also do some live action, and we'll see what the market has to offer. So yep, tune in. Like I said, you'll find this one in the description. You can find the link in the description. It's a Zoom webinar. So right, in terms of economic data, let's jump into the economic calendar and let's see what's happening today. Like I said, there is a bunch of data coming out. So Canada, let me just bring some countries back here onto the table. Okay, now let's jump into Asia here, Taiwan, Japan, New Zealand, Australia. Let's do these. Right, so look, yesterday we had a few pieces of data coming out. One of the important ones was the job openings. Those came out on the lower side. Today we have the ADP number, which is coming out. So the market is watching all these US job number data sets. This one is expected also to drop to 108K from 155. And of course on Friday, if you know, I mean, if you're aware that we're getting the NFP figure. So also in addition today, to the ADP number, we're getting the core and headline PCE reading. So the Fed's preferred inflation metric, the personal consumption expenditure price index, and that number is expected to decline a little bit. So in line kind of with the Fed's inflation target of 2%. So again, currently we know that the Fed is not willing to do any rate adjustments on the 7th of May. So next week we're going to get the Federal Reserve interest rate decision, and this is what and I think that this is what Mr. Trump is trying to push for. Like he's trying to change his mind to go for that rate cut. I think that this way is just basically he wants to continue doing what he's doing, but he understands that by doing what he's doing, the stock market goes down. But if you drop the rate, then the stock market could go back up again. So it's like I get what I want, and I can continue doing what I want, and also like just without any how to say it, without any idea that that's, or without any blame that the stock market has dropped or something like that. So look, okay, let's see how this political game continues, but I think that the interest rate will remain the same as previous, and I don't think that if he changes his mind, if Powell changes his mind and goes for a rate cut, this could actually show that the Fed is losing, kind of credibility and is losing independence, and basically that's the whole point, to show that the Fed is independent. And okay, I don't know if it's like, if it's just the front image, maybe still in the background there's a lot of things happening, a lot of agreements happening, but nevertheless, you still have to maintain that image that the Fed is an independent entity, and it cannot be influenced by any political leader. So, long story short, for now, I think that given that we are not seeing any cuts, I think that the stock market could remain somewhat on the positive side, despite the no action in the rate cuts. Because, like, just for the exact reasons what I just said, because if they're going to show that they're a little bit, they're vulnerable to the White House, then this could actually, this could backfire. The stock market could drift a little bit lower. Let's see what's going to happen, of course. But yeah, for now, we're watching this data, the Fed's favorite inflation metric, the PCE. If it comes out on the, somewhere near this figure, the forecast, that's fine. I mean, it's all good. My only concern is that if it somehow gets back to 2.5 or maybe above that, then we could see actually the stock market reversing a little bit lower. Let's have a look at the dollar index. The dollar index is also waiting for for the rate announcement, but not only that, of course, it's also waiting for the PCE, which is coming out today. So, but from the technical perspective, I'm seeing this more of a inverted head and shoulders pattern right here. So the left shoulder here, head, and then the right shoulder. And this is, like I said, this is where it could be quite interesting later on. However, I cannot really get way too comfortable with the upside because this, like I said, this downside line. I mean, yes, it's great if we can break it, we could go higher. But my next target here could be this upside line and a retest of it from the other side, from the underneath. This upside line is taken from the lowest point of July of 2023, and it might provide a bit of resistance. So I'm not in any rush yet. So that's what I'm looking at the moment. And like I said, it could pop higher, but again, I can only consider it pop higher if we do break that, if we see some signs of getting a violation of this downside line, the so-called neckline of a possible inverted head and shoulders pattern here. But then the next target is, like I said, this upside line, which could be tested from underneath. And if that gets cleared, then yes, my next target is this other downside line taken from the high of the 3rd of February. So yeah, a lot of room here and a lot of possibility for the upside. However, I would say don't rush yet. So again, we're looking at the PCE. If the PCE comes out a little bit on the higher side, higher than the forecast, maybe that could be enough for the US dollar to drive back up again. Let's jump into the German index DAX. I mean, this is one of the best indices here. I mean, look at this. Look at this V-shaped recovery. Boom. I mean, wow. I mean, look. So far, what we're doing here. We're gaining around 13%. We're gaining around 13%, and that is spectacular. I mean, the maximum that we gained this year was around 17, almost 18%. And at the moment, we're like, what decline? There was no decline. We just like a minor hiccup or something like that. So now we're seeing this rally. And the question for me is, look, I talked about this on Monday, and I said to you, keeping an eye on the 79 zone. I mean, like if we jump, my next target is this 79 territory, and we tested that, and then we drifted back down. Look, now we're clearing the 79, and what I'm talking about, the 79% here on the Fibonacci, retracement, which is drawn from the highest point of March to the lowest point of April. I mean, look at this. I mean, move in the beginning of April, we sell off rapidly. Then we found good support near around 18,500. We rebound, and we're now back above 20,000. We're back above all my EMAs here on the daily chart. We're now flirting with this 22,573 territory. So if that gets cleared, I would say my next target is this little area, this 23,200 zone, and of course then what we're looking at is the all-time high. Again, it's like I said, it's very interesting to watch how these developments are ongoing, and at the moment it seems like DAX is unstoppable despite all these issues with the tariffs and all that stuff. So but I think that the market just understands that, you know what, I think that the deal will get reached. We're seeing some that the White House does understand that it's not really helping not only the Europeans, but also the U.S. domestic market. I mean, like, what you're gonna do with auto parts? There's like a big market for that. Like, you have a lot of British cars, a lot of German cars, Italian cars. So yeah, like, I mean, what are you gonna do with those parts? So those parts have to come from abroad, and in the U.S. with the big how to say it, the one of the wealthiest countries in the world, where a lot of people have expensive cars, and those expensive cars are not really U.S. made. So you need parts for those cars as well, and you need in other things, and not only parts, just in general, like interior, structural, like mechanical parts. So yeah, and that's, like I said, and I think that they have realized that, and that's why they're all about talking right now and trying to negotiate and blah blah blah. Well, again, we'll see how it goes. Look, what can I say? For now, like I said, I'm leaning towards the upside still, but it's very difficult at this point. I would say I'm just observing the price action. Although I'm positive, I'm not. I wouldn't be, let's say, doing anything at this point, because this is way too tricky, and I don't like buying when we have a steep up move like this. Look, if it starts correcting back below the 79% here, I will consider a bit of a retracement back down. Finally, from the indices, the FTSE 100, similar story. Boom, we cleared the downside line, we stayed above it. So yeah, I'm gonna still stick to the upside. In terms of economic calendar, I forgot to put UK here. Let me just where's the United Kingdom? There we go. So I forgot to put UK, okay, in terms of economic data today from UK, not much, no. Local elections in the UK, BOE, consumer credit, mortgage, blah blah blah. Okay, look, nothing major from the UK this week, the remaining week. So let's have a look at what's happened yesterday. Not much as well. So the UK is kind of chilling this week. That's fine. Next week, I think that they could, chill less. But let me just refresh my memory on the interest rate decision. The BOE will be holding its interest rate decision. Let me just open up my file. BO, where's that? Where's that? Where's that date? Right, okay, 8th of 8th of May, we're holding the interest rate decision. So yes, the BOE. So the day after the Federal Reserve, right? Oh, just made. I've noticed something that I need to correct very quickly as well. But okay, let's see what I can do here. Right, apologies for the little stalling here moment here, because again I've noticed some sort of like a little error that I made, so I need to correct that after the webinar, but that's fine. Look, coming back to the situation here, look, I'm going to stick to the upside. For me, the downside scenario on the FTSE 100 would be a move back below the downside line and back below this 200-day EMA. Let's have a look at what's happening with in the Forex world. AUDUSD, look, I'm going to tell you something quickly here. Basically, for now, I'm waiting here. For now, I'm waiting to see what's going to happen. Look, the RBA is going to report their interest rates on the 20th of May, RBNZ on the 28th of May. So, but until then, look, we got some data. We got some data this morning. We had the Australian CPI, the Australian inflation number that came out year on year, figure 2.4, the same as previous. Q on Q came out at plus 0.9. The monthly CPI indicator came out at 2.4. So, look, in general, inflation seems to be okay. I mean, I don't think that there is the need for any action from the RBA at this point. I think everybody's just watching what's going to happen with the US dollar. If the US dollar gets stronger, okay, we'll see a move to the downside. At this point, what I'm going to do and how I'm going to play this game, I'm going to, first of all, get rid of these lines, no longer needed. And if we do fall back below all my EMAs on the daily chart here, I'm going to consider a move lower. That's what I'm going to do, yep. And at this point, like I said, at this point is just this is just exactly what I'm just gonna, touch on. If we do fall, like I said, below this, then we could see a nice little correction back down, and this is where I apply my beloved Fibonacci. Look, a drop below all my EMAs kind of coincides nicely with that 23.60 on the Fibonacci retracement. If we draw it this way, if we draw it from the lowest point of April to the highest point of April, I think that this is quite reasonable. Then we could aim for the 38.2 here on the Fibonacci retracement, and then we could go from there. The upside scenario, pretty straightforward, honestly, pretty nothing to add here, just to wait for a pop-up of the current highest point of April near the 0.6450, and then yeah, we could start examining some higher areas. In terms of higher areas, what could we do here? We could target something around here, something around the 0.6550 zone. AUDJPY, just a quick update here very quickly. So yes, our risk on risk off monitor is trying to make its way back up. That's fine, but again, as I said before, I'm limiting the upside only up until this downside line, which is taken from the highest point of July of 2024, and then we'll go from there. In terms of the downside, I would prefer to wait for, well, at least a drop back below this 90.58 zone. The low of, I think it's the lowest point of this week. Yep, a drop below this area could attract a few more sellers. NZD USD, just a quick update, similar story like AUD USD. I'm considering a little bit of a retracement, but I'll get more comfortable if we do drop back below the 0.59 zone. USDJPY, we held nicely near this 142 zone. That's great. So I talked about this. I said that if we do push and pop above this area, my next target is the 144.55 zone, and then we'll go from there. If we do clear this area, of course, we could go for a larger correction to the upside. So at the moment, I'm doing exactly that. I am keeping an eye on this downside line, and yep, I'm kind of leaning a little bit more towards the upside as well on this pair. Don't forget that we do have the BOJ coming out tomorrow, and because of no action in a way, there could be some weakness in the Japanese yen. We could see that because like I said, everybody would be expecting maybe a hike, but just to maintain inflation. But if there's nothing happening, then there would, like I said, the Japanese yen could take a little bit of a hit, and also in line with the idea of the US dollar kind of correcting back up a little bit. Let's see. USDCAD. Now this one's interesting for me because again, I talked about this. Look, for now we're in this little falling wedge pattern. We do have a bit of data coming out today from Canada. That's the GDP number, the month-on-month. Yeah, we'll keep an eye on that one. That one's forecasted to drop a little bit. So that's forecasted to drop a little bit. So again, I would say that's fine. No issues, no harm there. But If that comes out, on the lower side, we could see a little bit of a breakthrough here. Now, look, what I mean by this is that I like this pattern, and this pattern to me looks a little bit more on the bullish side because I'm just going from previous experience. Whenever we have a strong decline like this and then a gradual decline within a falling wedge or a falling channel, we tend to kind of break higher. However, confirmation is needed. So I think at this point we can say that the confirmation here is this breakout of through the upper side of the falling channel. If we can get that nice clearance, 1.39, here we come. And if that gets cleared, of course, then we can start, examining further upside. But hey, long story short, for now, I am just keeping a close eye on this one. And for now, I'm just, like I said, just getting, trying to remain comfortable with this idea, examining this idea of a breakout. Look, if we start falling below the 1.38 territory, somewhere here, or actually 1.3780, yep, I will consider a move lower. In general, I should say it this way, that as long as we stay within the falling channel, the trend is to the downside. At least the short-term trend is to the downside. It could still move lower. So don't rush into, this idea that, it's gonna pop higher and stuff like that. No, wait for the confirmation, and then you can do something about it. Just a quick glance at the USDCHF. It kind of represents what the DXY is doing. So again, at the moment we're waiting. EURUSD looking good here. So look, again, the same story. There's a lot of excuse me, a lot of attachment to the US dollar right now, and that's why we're waiting to see what the White House will do, what's going to happen with the Fed, how the US dollar is going to react. And that's like I said, that's our problem with other pairs. We don't really have like major catalysts on other in other areas. Unless it's a central bank that's reporting its interest rate. So that's what I'm saying. So that's why with the euro, yes, the European data comes out and everything, but I think at this point it's just really like we're really watching what's happening with the US dollar. That's the thing, and that's where it's at this point, like I said, it's a one-man show and kind of one country show in a way. Yes, other nations are involved in this as well, but they're kind of more of how they're gonna respond. And at the moment, we're seeing that Europe is standing firm, or at least trying to do so. And we can see that it's kind of helping them. It's helping them. The euro is on the stronger side. Of course, we can all think about this in another way. We can all think of it this way, that the weaker dollar right now is helping out a little bit the U.S. because again, their exports become more attractive to the rest of the world. Their U.S. goods are cheaper. So why not to enjoy the little moment of a weaker dollar at this point for now, at the expense of the nation. EUROJPY. So okay, look, I'm loving this one. I am loving this one, and I said to you previously that as long as we stay above all these EMAs here on the daily chart here, the 50, the 100, the 200, as long as we stay above that, I'm going to continue targeting the upside. So far, I'm sticking to my words. This downside line no longer needed. In my opinion, I think that we can actually draw a nice little upside line now, and this way we're creating a nice little ascending triangle pattern. So now, according to all the TA rules, technical analysis rules, as for us to get comfortable with this idea, we need to see a break of this barrier, this 164.18 zone. If we can get that move, amazing. More buyers here could join in. So while we remain inside the pattern, we should remain kind of somewhat on a neutral side, and that's what I'm saying. So that's why at this point we are carefully monitoring this barrier here, but at the same time, I'm actually still somewhat positive, I would say, And like I said, as long as we remain above all my EMAs on the daily chart here, I'm just gonna enjoy the moment. Let's have a look at the GBPUSD, and we'll then jump into other instruments. Near key area of resistance, 1.3434 zone here. Look, it's interesting one. It's an interesting one. This is the highest point of 2024. We did we did surpass that, but we're struggling to stay above that area, above that 1.3434. If we somehow push and stay above this area, great. I'll go to the upside. Let's jump into the commodity world. Gold at the moment is stuck, and we're waiting for the catalyst. And one of the catalysts, of course, first of all, we're watching the PCE numbers today. That's one thing. ADP for sure. And then the next big thing will be the NFP on Friday. So we'll watch that. And of course, this is all US data, but because gold is denominated in US dollars, that's why we're watching it, right? So look, and then after that we'll have the Fed, who will be the catalyst for all this. But at this point we're stuck, and I think the market is waiting for some clarity. We'll see what's going to happen. We'll see what's going to happen with the PC. If not much movement there, I don't really expect gold to make strong moves. But that's why I have my preference here as these Fibonacci levels. This Fibonacci is drawn from the lowest point of April to the highest point of April, and I'm watching the 23.6 and the 38.2. This is my resistance and support area. And if we do clear one of those, then I'll consider the next short-term directional move. At this point, I'm just observing the price action. Let's jump into silver. Silver is also stuck a little bit, but still stuck in a positive way, I would say. We remain above all the EMAs here, and as long as we stay above all the EMAs, I'm going to continue targeting the upside. Let's jump into copper. Ooh, very nice, beautiful move here. This can be attributed to a lower Chinese number. Let me just lower production number. Where's that number there? Oh, where did I not add China here? Let's mainland China. There we go. So yeah. So basically, this figure, Tizen Manufacturing, it did drop. It did come out lower. Yes, like I said, it came out better than the forecast, but still, it's on the lower side. And the production has dropped, and we've noticed, there were some reports were coming out. So China manufacturing shrinks. Where is that NBS figure as well? NBS manufacturing, there we go. It in general, it came out very well in contraction territory. So this is another important figure to keep an eye on, NBS manufacturing PMI. And look, if manufacturing falls, copper falls. Chinese manufacturing falls, copper falls, because China is one of the biggest consumers of copper in the world. So, and yeah, there we go. We're seeing the effects. Look, I would say this way: we should not sound the alarm yet, because again, this could be classed as just a little temporary correction. But again, like I said, let's keep an eye on the 100-day EMA right now. At the moment, we fell below the 50-day EMA. The next target is the 100-day EMA. If that gets cleared, the 200-day EMA, that's what I'm going to be watching next. So let's see how this is going to play out. Let's jump into oil. Oil is working like a charm. Look, I did throw out this little piece here on oil recently in one of my videos here. More downside for WTI crude oil. And look, I mean, it has a decent amount of views. I mean, I'm assuming people did enjoy this, and I talked about this also. Did I not throw it out here as well? No, I didn't throw it out here. Okay. In general, yes, I threw out one piece here on WTI oil when it got a boost, but is this really enough? Because what I kept on saying, that I am bearish. I am still bearish in oil, and I am not really seeing any, light at the end of the tunnel on this one. Look, we fell below the $60 mark again, and to be honest, I'm gonna continue targeting the downside. 57.26 is the next area, what I'm watching, and then the 55.10. The lowest point of April, what's going to be my next target. I think that this is something for May, but again, and after that, look, I mean, this is just like I said, it is opening the door to some much lower areas. Natural gas, let's have a look at this one very quickly. We're in this nice little falling wedge pattern. Look, I talked about this and I mentioned this and I said, look, keep your eyes on this. You know, if we could still continue drifting lower while we remain inside this falling wedge. And now the question is, can we clear this upper side of the falling wedge? If we can do that, great, I'll consider a move higher. If we can clear all my EMAs here as well, then yes, great, I'll consider a move higher. But I have to stress this, you know, I cannot stress this enough. I have to say it this way. Yes, we're seeing a strong move right now, but in general, if we struggle to overcome the upper side of the falling wedge, we could still drift back down again. Coffee. Coffee did violate my 411 territory, but failed to stay above it. So look, I'm going to say this way, that I'm going to continue targeting the upside if we do pop and stay above the 411 territory. And finally, you know what? I'm going to pick up on cotton, one of my favorite ones here. So look, it's falling back below all my EMAs on the daily chart, and this is getting a little bit of a bearish indication. Now, again, Chinese production is falling, and you know, cotton is also not feeling the love here because of that. Because we know that textile, you know, like China does produce a lot of clothing and you know, a lot of cotton clothes. So if Chinese production is falling, then what's the point of using more cotton, right? Look, at this point, I will say it this way. I would prefer to see a move back above the 100-day EMA in order to get comfortable with the upside, at least some upside, but at this point, I just have to stick to my lower levels unless we get a nice little hold up above the 65 territory. Let's jump into the crypto world very quickly, where Bitcoin is stuck. I did do a piece on Bitcoin yesterday, so you can check it out here on our YouTube channel. Also, I did pick up on Ripple yesterday as well, and here on TradingView, you can check that piece out. But look, in general, I will say this way. For now, I'm still somewhat positive as long as we stay above this upside line. If we somehow start breaking this upside line, then yep, my next target is the 50 and the 100-day EMAs, and then we'll go from there. Bitcoin Cash, this one is correcting back down. The 200-day EMA is providing good resistance. So hey, what can I say? At the moment, it's the barrier, the breakout barrier is the 200-day EMA. However, if you're looking for some lower levels, I would say wait for a drop below the 50-day EMA. This way, more sellers here could join in. Ethereum, very quickly. Ethereum is stuck. We're just kind of flat at the moment, but somewhat positive because we remain above the 1,755 territory. That's great. However, I prefer to wait for a pop-up of the 50-day EMA in order to get comfortable with some higher levels. The downside scenario on this one, for me personally, I would like to look at the this upside line. This upside line, and yep, for now, this is something that I am willing to, like I said, accept at this point. If we do break this one, I'm going to go lower. Ripple. Ripple, this is what I talked about yesterday, and that's why I threw out this little piece here. We were still very close to this downside line, and that's why I wanted to show you what I wanted to kind of throw it out beforehand, because this is the kind of the key resistance area. If that gets broken, then yeah, okay, great. We'll go for some higher areas. We'll go for the 2.58 zone and stuff like that. But for the downside, I would like to see a drop below the psychological 2 level. If we can get that move, amazing. More sellers here could join in. Litecoin is stuck, but in a good way. We're not really falling off the cliff or anything like that. No, but we're trying to find some support, and at the moment I think we're finding it. So look, we're near these EMAs. If we can clear those EMAs, great. I'm very happy, and I'm leaning towards the upside. Dogecoin, what's happening here? Similar story. 50-day EMA is providing good resistance. Oh, excuse me. But we need to see a nice clearance here first. Look, overall we're in this falling channel, right? Where we crossed the midpoint of this falling channel. In a way, as long as we stay above the midpoint of this falling channel, we could still see some action to the upside, but let's see, like with a trajectory to the downside. It's like, you know, in the short run, we could see a move higher here, but overall, the overall trend right now is still to the downside. And Polka Dot is also a similar way stuck below the 50-day EMA, but it's very close to it, so there is a good chance of actually having a nice little decent breakout here above this 50-day EMA. If we can get that move, amazing. More buyers here could join in. So, ladies and gentlemen, that is a wrap. That is a wrap for this session. I hope you found this useful. I hope you found it useful. Yes, I hope you enjoyed the session, and also don't forget to join my session today later on, where we're going to be doing some live trades. I mean, I'll go through some material with you during the day. So just follow the link in the description of this video. It's a Zoom webinar, and you need to register for that. But look, it's closed, kind of closed private live event. So happening today. Feel free to join. Like I said, more details, like I said, in the description below. So follow that, and yeah, hopefully I'll see you there later on. Ladies and gentlemen, thank you very much. Thank you very much. Have a beautiful trading day. Stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I shall see you. Later. Something happened to my camera, as I understood, and yep, my camera seems to be off a little bit. So something happened. I think that there was an issue. There was an issue with the camera. So, well, okay. Anyway, but there we go. Now it's fixed. I mean, but hopefully next time, ladies and gentlemen, let me know in the comments. You know, if something is wrong with the camera. Again, these issues happen, technical issues. But hey, you know what? We're all human. But yeah, let me know. Let me know what you think in general. Leave a comment if you want, or like I said, join my webinar today. Ladies and gentlemen, thank you very much, and I shall see you later. Bye bye.